Happy Monday, everybody. I hope you had a great weekend. Now we're quickly moving through the year and another week is coming on. Now, today is June 9th, 2025, and this is your Monday market update. Last week's market update was on Wednesday since I was out on Monday and Tuesday due to the Shavuot holiday, in case you missed that. So I'm going to give a short update from Wednesday, Thursday, and Friday of last week, how we closed for the week, and what we're watching this week. Let's jump in. Stocks traded sideways on Wednesday after a turbulent morning of disappointing economic reports. The ADP private payrolls report missed big, adding just 37,000 jobs versus expectations for 110,000. That combined with an unexpected ISM surveys PMI dropping into contraction territory, remember that's under 50, came in at 49.9, triggered fears of slowing growth. Still, the weakness sparked dovish money flows that kept a floor under the markets, with growth stocks pushing higher early in the session. Headlines around a delayed AI launch from Apple and Alibaba due to trade tensions also dragged on sentiment. After drifting most of the day, stocks ended flat. The Dow down 1/4%, S&P up less than 0.1%, and the Nasdaq up 1/4%. On Thursday, markets opened strong on the back of upbeat global data. China's services PMI beat expectations, and Eurozone PPI cooled significantly, helping temper global inflation concerns. The ECB also cut rates by 25 basis points as expected, which initially fueled a global risk-on rally. The early momentum was reinforced by news of a phone call between President Trump and Chinese President Xi, sparking optimism for new tariff negotiations. But by midday, sentiment reversed sharply. Emerging details suggested the ECB may pause further rate cuts, and U.S. headlines took a negative turn, highlighting a Trump Elon Musk feud and fresh signs of labor market weaknesses from jobless claims. A late session sell-off accelerated after Tesla shares actually dropped 14%, all in the back of that argument, pulling down the broader tech sector. Dow was down 1/4%, S&P down 1/2%, and the Nasdaq was down 0.75%. Markets roared out of the gate on Friday morning after the May jobs report beat expectations. Remember, this was the one major thing we were watching for last week. 139,000 jobs added versus 129,000 expected, and unemployment stayed steady at 4.2%. That was enough to tamp down fears sparked earlier in the week, especially with wage growth coming in at 3.9%, a bit hot but not crazy alarming. Early session strength was also helped by a rebound in Tesla shares and a more conciliatory tone between Trump and Musk after a rumored phone call. Traders cheered the combination of soft landing labor data and an easing mega cap tech pressure. Momentum cooled into the afternoon as investors digested a whirlwind week of trade, jobs, and inflation data. But all three major indices actually finished with gains. The Dow was up 1%, S&P up 1%, and the Nasdaq was up 1.25%. For the week, the Dow was up 1.25%, S&P up 1.5%, the Nasdaq was up 2.25%. This week is the week following the jobs week. So as you probably recall, it's usually light on eco data. Add to that the blackout of the Fed heads, a blackout period for the Fed heads, and this week in June is going to be quiet, right? Well, maybe in an alternative universe it'd be quiet, but here we're sure to have fireworks. Most importantly, this week we're going to get inflation data in the form of CPI and PPI. It will all depend on how everyone interprets this noisy data, since tariffs influences have probably started to leak into the data. We'll also get more labor data and the weekly high frequency jobless and continuing jobless claims. Both good reads on the labor market strength. Now we're going to end the week with inflation data from the University of Michigan survey, data on inflation expectations along with sentiment. As markets are waiting today, we'll be watching U.S.-China trade negotiations and the rhetoric that comes along with it. There's China nuclear news. There's Tesla robo-taxi should start rolling in Austin this week. And a very important news column, Apple, one of the top 3 largest companies in the world by market cap, depending on which day it is. It'll be holding its developers conference, and that's starting today. And the news from Apple will be important. It is one of the most heavily owned stocks in indices and ETFs, as well as just by market participants. Big news there may move markets. All 3 major indices start the week in the green for the year, and the S&P 500 starts this week within 2% of all-time highs. So news of all sorts should make a difference. Okay, there you have it for a short update. There's no void in a news cycle these days, so please check back on Friday for the planning video, and then Monday for the market update next week. Call me with any questions and stay true to your goals. As we said last week, the noise is loud, so stay focused. Have a great week.